Welcome to the Indian Insight Report on dollar index and the Indian rupee. Both dollar index and USD INR currency pair have been rallying hard for past few weeks and are now hovering around their very recent highs. We are seeing some interesting developments on the short-term charts, and we think the recent highs might not be broken immediately, but to be sure, we do anticipate these highs to be broken sooner rather than later. Let's look at what we have got today. First up, we have one of our favorite patterns, which is the ending diagonal pattern. An ending diagonal triangle or wedge, as many call it, is a narrow price move composed of two converging trend lines, highlighting a wave 5 pattern. The best feature of this pattern is that once the pattern is confirmed, we can readily say we have a reasonable stop loss level and a reasonable price target for the pattern. We have produced an ideal diagonal pattern for your reference. We are likely seeing this pattern unfold on the dollar index charts. You see how once this 5-wave movement is over, which is shown here as 1, 2, 3, 4, 5, we can expect a move in the opposite direction. The stop loss for the pattern is set above the highs over the level where wave 5 ends, and the target is set at the beginning of the wave 1 for the pattern. We are likely seeing this pattern unfold on the dollar index. We are showing here another chart of the dollar index. As you see, the 1, 2, 3, 4, 5 wave count on the chart is probably a diagonal triangle. Both the lines are converging and the price action is narrowing. In light of this, the recent high of 100.37 on the dollar index is very likely to hold. This should entail a consolidation in the dollar index, with the index likely to fall to the start of the ending diagonal pattern, which would be the level of 98.42, and so this level should be the short-term target for the dollar index. Although we still await confirmation that the ending diagonal pattern has ended, which would happen only once the index breaks the lower trend line, which is marked as L2 on the chart. Correspondingly, we have some very interesting developments on the USD INR chart also. The hourly chart of the USD INR is probably evolving into a downward 5-wave movement based on our article published on October 11, where we said that USD INR is approaching a make or break level and gave a target for the currency pair of around 67. We now notice that the currency pair has come very close to our target. Its recent high was around 66.91. This development, followed by the recently evolving 5-wave downward movement on the hourly chart, indicates that probably the recent high of 66.91 made by the currency pair might hold up for the short term, and after a brief pause in fall, which we saw on the 30th of November, we should expect a much deeper fall, and we should expect a reasonable short-term target of 65.85 for the currency pair. Thank you for tuning in on our report on dollar index and the Indian rupee.